What in the world does a tax prep prepping for an IRS exam have in common with an immigrant trying to get a green card? It seems like two totally different worlds, right? But it turns out they're both playing on the same field, governed by the same invisible and often unforgiving set of rules. You see, the real link here isn't what they're trying to achieve. It's about the complex system they both have to deal with. And this system, well, it has its own logic. It's a logic where following the exact steps and being incredibly precise is everything. Getting the process wrong can be just as bad as getting the final answer wrong. And that's really the heart of what we're going to break down today. In this whole world of government compliance, whether it's the IRS or USCIS, it's not just about the end result. It's the journey. The specific paperwork you file, the exact questions you ask, the precise fee you pay. That's being put under a microscope. So to really get this hidden logic, we're going to look at it from 4 different angles. First, we'll see why the way you work is just as important as the work itself. Then, we'll explore how one little action with one agency can set off a massive chain reaction with another. Third, we'll talk about how this system has zero tolerance for mistakes. And finally, we'll look at how your responsibility is growing to include reporting on what other people are doing. Okay, let's kick things off with this idea that just getting the right numbers on a tax return, well, that's not good enough anymore. The IRS is now super focused on how you got to that number. It's a concept they call due diligence. So what does due diligence actually mean? Honestly, the best way to think about it is like a detective building a case file. For tax preparers who are claiming certain credits for their clients, like the earned income tax credit, it's a formal, required process. It's not about just taking your client's word for it. It's about proving you did your homework and have the receipts to back it all up. And this isn't some vague suggestion either. It boils down to 4 very specific, auditable steps. First is the knowledge requirement. You have to ask your client the right questions to make sure they actually qualify. Second, the worksheet requirement. You gotta use the official IRS worksheets to do the math. Third, you have to file a special form, Form 8667, basically swearing you did all this. And finally, you have to keep meticulous records of everything. Now, you can imagine, from the client's point of view, this can feel a little intense. They're probably thinking, do we really need to get into all of this just for my taxes? And you know what? It's a totally fair question. But the system has a very direct and very painful answer for why it matters so much. $650. That's the penalty the IRS can hit a tax preparer with for each time they fail to meet one of these due diligence requirements. And get this, that's per credit. So let's say you're working on a return that claims 4 different credits and you drop the ball in due diligence for all of them. For just that one client, you're looking at a $2,600 penalty. That tells you everything you need to know about how seriously they take the process itself. Okay, so this focus on process isn't just stuck inside one agency. Things get really interesting when you see how an action you take with, say, immigration, can set off a domino effect that topples straight into the IRS. It's a cross-agency chain reaction that can catch you completely off guard. Here's a perfect example. If you're a green card holder and you happen to work for a foreign government or an international organization while in the US, you might be exempt from US income tax. Sounds great, right? But here's the catch. To keep your green card, the Immigration Service, USCIS, makes you sign Form I-508, which basically waives some of your diplomatic rights. The very moment your pen hits that paper, poof, you permanently lose your tax-exempt status with the IRS. So you're stuck in this major trade-off. You can keep your permanent residency, sure, but it comes at a huge financial price. That one signature creates an unbreakable, irreversible link between your immigration status and your tax bill. The two agencies are connected by that single form, and a lot of people have no idea until it's way too late. This brings us to our third big theme, this system's absolute obsession with precision. There is no such thing as close enough. It doesn't matter if the task is super simple or incredibly complicated, a small mistake gets the same treatment: rejection. Let's start with a really simple one from USCIS. You're mailing in your application, but you accidentally miscalculate the filing fee. Maybe you're off by just a few bucks. The result is automatic. Your entire package gets rejected and mailed right back to you. The system isn't there to help you fix your mistake, it's designed to just reject it. Now, let's apply that exact same principle of precision to something way more complex: the IRS foreign tax credit. The rule sounds simple enough. You can only claim a credit for foreign taxes you were legally required to pay. It's called the compulsory payment rule. But oh boy, the implications are massive. So here's the crazy part. Let's say a foreign country overtaxes you by mistake. If you just pay it without putting up a fight, the IRS will say that extra amount was not compulsory, and because of that, you can't claim it as a credit on your US taxes. The IRS expects you to first exhaust every effective and practical option to get that money back from the other country. Your inaction actually turns into a penalty. It's a perfect example of how precision is absolutely not optional. And for our last point, let's talk about how the world of compliance is getting bigger. It's not just about reporting on your own stuff anymore. More and more, the system is making you responsible for reporting on what other people are up to. Anyone in business probably knows this number by heart: $10,000. If you get more than that in cash from a customer in one shot, you have to report it to the IRS on Form 8300. It's a crystal clear rule, but the logic of compliance actually goes a step further. Here's the part a lot of people miss. The IRS strongly encourages you to file that exact same form for any transaction that you think is suspicious, even if it's for less than 10 grand. Suddenly, the obligation shifts from a hard number to your personal judgment. Your duty to report is no longer just about the dollars. It's about the story behind them. And this expansion is happening at warp speed online, mainly because the government is trying to track all the income people aren't reporting. The threshold for payment apps like PayPal or Venmo to send you a Form 1099-K is dropping fast. For 2024 taxes, it's $5,000. It's scheduled to fall again in 2025, and by 2026, it could be just $600. Think about that. Millions more people are about to be swept into this reporting system, effectively turning these platforms into tax compliance deputies. So when you put it all together, what's the big takeaway? It doesn't matter if you're a tax preparer, a business owner, or an immigrant. Just knowing the final rules isn't going to cut it. To truly master the system, you have to understand its hidden logic, that the process is king, that precision is mandatory, and that one tiny move can trigger a cascade of consequences you never saw coming. Which leaves us with one final big question to chew on. Is this incredible level of complexity a necessary feature to keep the system fair and stop fraud? Or has it become a bug? A system that's so complicated it ends up creating traps for well-meaning people who just want to do the right thing.